Kyle Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, Security Token pioneers. Welcome back to the Security Token Show. I'm your host, Kyle Sonlin, joined by my co-host, Herwig Konings. And we have an amazing episode for you today, talking about everything security tokens, from the news to trading to our main topic. And before we get into all of our amazing episode today, we do have to thank our sponsor, which this week is Exodus. Exodus is a crypto wallet, online, offline. They're storing cryptocurrencies from all around the world. But more importantly than that, they actually completed a $75 million Reg A Plus fundraise backed by equity in their company via a security token. So they were able to raise from the crowd, I think like over 6,000 investors, and now it is trading on T0, and so their equity is trading via a security token. So that's fantastic news. Thank you to Exodus for being our sponsor this week.
Thank you, as always, to our sponsor for making this show possible. And with that, Kyle, let's get right into the show. We've got a great episode lined up. Later today, we're going to be talking about how we are defining security token NFTs. It's a pretty big deal, especially with some recent news, which we're gonna get to. But first, Kyle, the top 5 things that you need to know in the industry right now. What is number 1?
Well, Herwig, number 1 for this week is huge news coming from Security Token Market. You know us, you've heard about us before, and officially, as of today, and we have launched a crowdfunding campaign via Security Token offering. This is huge news, incredibly exciting, driving industry adoption of the token economy.
Anyone around the world can go to Securitize and register and pledge to invest in Security Token Market, the very company behind the show you're watching right now. Kyle, you know what that means? Champagne. Let's do this thing. Whoa, wow, that was fast.
Nice.
Cheers.
Cheers.
Well, folks, actually what we're doing is our Testing the Waters campaign, which means we're allowed to go loud about our upcoming offering, but you can only really pledge how much you'd like to invest and hold your spot in line. So head over to Securitize and go ahead and register.
We're not accepting any money at this time, so just sign up, build all the traction. We can't wait to see the response from the market. But moving into number 2, we have a big piece of news coming from T0. They're following up on their plan to list additional assets to market. This time, it's XY Labs. This is a company that raised a Reg A Plus back in 2018. They raised $22 million from over 24,000 shareholders. But the problem has been that since that time, they've been fully illiquid. Those shares have not been able to be traded anywhere, and they are now listing on T0 to provide liquidity for those shareholders. This is awesome, fantastic news coming from XY Labs and T0.
24,000 more shareholders that might want to trade. Now moving into number 3, regulation. So big update. Congressman Patrick McHenry, who was originally behind the Jobs Act of 2012. That's actually the law behind Regulation A+, as well as Regulation CF, and many of the crowdfunding exemptions that are available today. And he's back at it again, this time with digital assets, trying to take on, I guess, the beacon of Hester Pierce, the SEC commissioner that back a couple years ago now, maybe, at least last year, introduced a safe harbor idea, a proposal where developers in the space launching cryptocurrencies, whether they were securities or not, would have 3 years of essentially a safe harbor, essentially no enforcement from regulators. This would, of course, cultivate innovation and give innovators room to develop their projects, but in this case, that didn't work because the SEC needed to approve it. Now, Patrick McHenry is trying to go the Congress route by introducing this bill. It's called the Clarity for Digital Tokens Act of 2021, and we'll see how far it gets through Congress, because especially we saw the current SEC chair, Gary Gensler, who has said that actually they're not planning to do a blanket ban on crypto like we've seen in China, and we can continue to kind of see specific enforcement actions on companies moving forward.
Yeah, McHenry specifically called out Gensler and talked about how he's had some potentially contradictory statements that are stifling innovation. They're looking to push forward some innovation and allow for more clarity in the digital asset space. That's a big deal.
And if you do like the regulators, you should check out this Forbes interview. I did see it. It's on the previous SEC chairman, Jay Clayton, who talks about DeFi, stablecoins, and Bitcoin ETFs.
And rolling right into number 4, we have a big piece of news coming from Deutsche Börse in Germany. It's the largest exchange in Germany for traditional securities, and they're now getting into the digital space as well. They're launching a platform called D7, which is a trading platform and post-issuance services management platform specifically for digital securities. They're trying to provide liquidity and trading services for digital assets, specifically securities that they are launching in partnership with Citibank, BNP Paribas, Goldman Sachs, and other investment banks. This is a big deal. They're launching it in November with a soft rollout with plans for a full operating launch with same-day settlement of securities that don't have stock certificates. These are digital securities specifically and exclusively by mid-2022. This is a huge deal.
And that's actually because of the law being changed back in Germany to actually allow for digital-based electronic shares management. And last but not least, Credit Suisse for number 5. That's another big bank that has joined the tokenization party. They're actually starting off in partnership with a company called Taurus, focusing on a Swiss sports resort. Actually, they have a chalets and they have a hotel, and they're actually an adventure company as they define themselves. But specifically, Credit Suisse has worked with Taurus to go ahead and tokenize the company on the Ethereum blockchain. That's a big deal, a public blockchain being used again by a major bank, just like we saw with Societe Generale. So I think that's fantastic news. And in fact, the Taurus Digital Exchange, which is completely licensed, will be where you can go ahead and buy and trade these tokens.
Yeah, what I love about this is that they're calling it security tokens. They're embracing tokenization technology and looking at exotic and new assets like a sports resort in the Swiss Alps. Everything about this is very exciting, and I think it's a perfect way to round out the top 5.
Then let's head over to Jessica and get the rest of the industry news.
Hi, I'm Jessica Burns, aka Token Girl 305, and I'm back with this week's industry updates. The rapid rise of stablecoins has garnered the attention of a growing number of global regulators. Today, stablecoins move closer to global regulation with the publication of a paper by the International Organization of Security Commissions. This is the entity that represents global security regulators along with the Committee on Payments and Marketing Infrastructures. It's hosted by the BIS. The CPMI and IOSCO have opened a consultation that confirms and clarifies that stablecoin arrangements should observe international standard for payment, clearing, and settlement systems. Greater regulation is on the way, but what is not yet completely clear is how a stablecoin will be regulated and whether or not certain stablecoins will be deemed a security. The document continues to highlight that users may be exposed to credit risk if a stablecoin loses value relative to a currency in which it is denominated or to which it is pegged, or if the issuer of the stablecoins defaults on its obligations to the participant. Next up, Archaz, the first FCA-regulated digital securities exchange, broker, and custodian, has today announced its subsidiary, Montanus Digital, which is building digitally native blockchain-based post-trade infrastructure to allow tokenized assets such as digital securities or security tokens to realize their full potential. Many tokenized assets are regulated instruments, and as such, they fall under security regulation in their jurisdiction of issuance, and regulations still apply. CSDR mandates that ownership of digital securities be maintained in a central securities depository if the issuance is being admitted to a secondary market for trading, such as Archex. Existing CSDs, however, are not digitally native nor blockchain-based, and so the full benefits of tokenization, such as recording ownership on the chain or tokens being freely transferable between wallets, cannot currently be fully realized once on a secondary market. This is one of the many examples of the new post-trade capabilities that are needed to underpin the growing and rapid adoption of regulated digital securities around the world. And in Singapore, UOB and the Digital Securities Exchange, ADDX, have concluded the digitalization and digital custody of the inaugural sustainability-linked bond recently launched by STEMcorp Industries. The collaboration with ADDX helps corporate clients such as STEMcorp tap the benefits of digital bond issuance for security, time, and cost efficiencies. Such initiatives enable their corporate clients in Singapore and across the region to engage a wider base of investors and enjoy the benefit of an asset tokenization. The use of DLT, the asset tokenization, has strong potential in rapidly improving how capital markets can operate in the future and is important our clients can take advantage of these new technologies. And a big win for Fireblocks, who has been selected to support Bankhouse, a German-based privately owned bank offering traditional and digital asset banking and fund services. Bankhouse will leverage Fireblocks' advanced custody technology, which allows them to become one step closer to becoming a one-stop shop and to expand digital assets and crypto service offerings to its customer base. Bankhouse specializes in providing white label services to clients, including crypto funds, and is currently servicing some customers who plan to launch a crypto bank with the bank, acting as a service provider, and are able to implement a range of solutions that include direct structures, securitization trackers, or vehicles that track crypto indices. And as an update for all of you following the Ripple case, a group of individuals who own digital tokens associated with Ripple Labs, Inc. can offer their meaningful perspective in the U.S. Security and Exchange Commission's case, accusing the company of violating security laws. U.S. District Attorney wrote that the 6 holders of XRP can offer opinions in certain legal questions in the lawsuit, which alleges the token is an unregistered security. The case is being closely watched by attorneys in the crypto space as regulators continue to grapple with how to regulate the asset class. The SEC has sued some digital token issuers for selling unlicensed security, while other assets such as Bitcoin have avoided that label. And that's all I've got for you from last week. Now let's go over to John with the latest STO and market updates.
Awesome. Well, thank you for those industry updates, Jessica. Welcome back to my side of the blockchain. They call me the Token Boy, and I'm here with your weekly security token offering update. First, I'll start with some good news from the STO space, and that is STOs are getting even more efficient. There was a research article published on the blog site medium.com by Christopher Weber and Benedict Eichmanns, where they took a big look at the progress of the global STO market. Since the inception of STOs with blockchain capital in 2017 and up until this year, the two authors were able to conclude that the success rate for STOs have risen positively. Additional takeaways from the research prove that STOs can be a valuable financing tool for large as well as small financing rounds. Specific regulations and exemptions support the development of domestic STO ecosystems. Repeat issuers are showing that STOs work and are an efficient funding method. And lastly, something that most of us in the industry are aware of, which is real estate will probably be the first catalyst for future STO ecosystem growth. So if you get a chance, definitely check out that article. Moving on to our STOs. Let's talk about InvestorX, who just recently announced their completion of a proof of concept project. InvestorX was actually awarded a grant for this project by the Monetary Authority of Singapore during September of last year. The project goal was to examine technological, legal, practical feasibility of tokenizing the Singapore Variable Capital Company, otherwise known as VCC. The project, dubbed Project EVCC, also came to the conclusion that there is nothing explicit in Singapore's existing laws prohibiting issuance of blockchain securities. These findings basically cleared a compliant pathway for future STOs within the country. The CEO, Gillian Kwan, commented that by tokenizing the VCC, they hope to support Singapore's ambition of becoming the world's fund management center, as well as the hub for capital market innovations. Up next, we have Alaya, one of the fastest growing action sports destinations in Europe, with 10,000 visitors a month, successfully tokenizing and depositing its shares with Credit Suisse. The tokenization was conducted in compliance with Swiss regulations and the Capital Markets and Technology Association standard. By digitizing its equity, Alaya simplifies its capital management in preparation for upcoming secondary trading. Tokenized shares will be admitted for trading on the Taurus Digital Exchange, which is the first independent regulated digital asset marketplace worldwide. Adam Bovine, a founder of Alaya, stated that with their projects, they want to offer innovative and disruptive vision with travel development and the leisure segment. And this will be happening in Switzerland and abroad. Lastly, we have a company called Fraction. It's a Hong Kong-based startup who has been granted an ICO portal license from the Thai security regulators last month. This means the firm can officially launch their own STO. Fraction currently plans to launch an STO with a backing of hard assets worth $462 million belonging to 3 Thai developers. The token holders will be eligible for revenue streams, dividends, and income generated from the assets. Tokens will also represent ownership interests. The dividends will be backed by the rental income collected from high-end properties. Investors in the offering will be able to buy blockchain tokens for as low as $150. Fraction plans to target offshore and Thai investors for the first quarter of 2022. Well, that wraps up my portion. Next up is Keith with your market update. We wait until next week, and I'll see you on the other side of the blockchain.
Welcome back to another weekly secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. Today, the total security token market cap is at $1.11 billion, rising just a bit this week, around 4.36% in gains. A rather quiet one this week. We've got lots of consistency in pricing data, but some spikes in weekly trading volume here and there. This increase in volume may be due to Securitized Markets launching its new secondary market trading for retail investors over the past week. We've had Aspen Coin up at $1.16 from $1.15 last week, maintaining its gain of about 4.5% from last time around. There was a brief sell-off, down to about 95 cents throughout the week, but it's since recovered up 22% from that brief price action. Volume for the token remains. It's at 21,000 for the week, and it's actually up about 20% in trading. Overstock pulled back this week after its monstrous rise of 13% up to $70. It's now sitting at $63.15, down a little less than 10% for the week. Trading volume is up 17% for the week, though, and that's hanging out around 1.38 million from 1.17 million the week prior. The INX token is hovering around 280 this week, up from 257 as we covered it last time. That's a rise of about 9% in price, with volume decreasing, though, down to 2.8 million since last episode when we saw 3 million in weekly volume for the top-ranked security token. Exodus, extending its losses down to $18 flat at the time of recording from $19.50 last week. That brings the token down another 7.5% after it already posted double-digit losses in last week's episode. Volume is up to 359,000 this week, which is an increase of just under 20%, potentially suggesting that investors may be taking interest in the token at these lower price levels. T0 stayed flat again this week. It's falling a little bit, though, down to 460, almost 10%. Volume spiked. It's up to 947,000 from 829,000 last week. Moving into tokenized stocks, we have Grayscale shares on the move to the upside with over 10 million in weekly trading volume on FTX alone. The rise in price can definitely be attributed to the rise in Bitcoin this week, which is up about 22% in price. This time around, all of the tokenized stocks tracked on STOmarket.com, out of all of them, FTX is responsible for the top 25. After the Security Token Market team and the Token Boys had a great time hanging out in the box for a preseason game at the FTX Arena earlier this week, we can say with confidence that FTX is on top of things. It's been yet another fun week in the markets. As always, do your own research and hit me up on Twitter at KeithDLT to send me all of your hot takes.
Wakey, wakey. Welcome to Inside the Metaverse with your host, Eve Van Call. We go over the top breaking news relating to the Metaverse weekly. I'd like to start off with Sky Mavis, raising $152 million and becoming the top gaming company out of all the mainstream traditional brands. Actually overtook giant names and companies in the video game industry, such as Take-Two Interactive, Zynga, and Ubisoft. That's pretty impressive to me because it just shows just how Axie Infinity's path towards becoming a powerhouse franchise is getting there, and that we have many more things to see from them. And this week, also, everyone in the world had a major addiction wake-up call when they found out that Facebook went down for a couple hours, leaving our precious WhatsApp obsolete. Well, here comes Oxen, the new WhatsApp killer, built on the blockchain, so you know what that means. No outages, no breaks, let that habit flow. Oxen creates privacy-focused encrypted message app, whereas Messenger and WhatsApp are known for aggregating user data and selling it for profit to advertisers. This company brings an encrypted messenger to protect the data. Next up, drop it like it's hot, because we got Snoop Dogg spending almost $500,000 on Cryptodes NFTs, effectively boosting the popularity of the collection. The rapper changed the Twitter profile of his NFT collecting alter ego, Cosimo, endorsing Cryptodes and giving the community a huge boost of encouragement. That's what's up. And wakey, wakey, up next. If you haven't been living under a rock, you have heard of the Squid Game, Netflix's #1 show to ever come out, killing every set record. Well, the series is now a VR game. Fight for your life in this fan-made VR game based on the popular South Korean survival drama. You can dodge bullets and run for your life in the red light, green light game simulator. That was Inside the Metaverse with your host, Eve Van Cole.
And moving into our main topic for episode 112 of the Security Token Show, we're going to be defining security token NFTs. We've talked about this before. It's time to reiterate that point. But before we dive in, Herwig, companies of the week.
Of course.
Biggest movers in this space. Who do you got?
Well, my company of the week is actually Societe Generale. They are one of the top largest banks in the world. They have roughly over 1.7 trillion with the T dollars in assets under management, and they're out of France, hence their name, and they have made some major moves in the past. I even mentioned earlier in the top 5, they were also one of the banks in the past that previously leveraged the Ethereum blockchain to launch a bond, and in fact, that bond not only was built on a public blockchain, but it worked with a central bank digital currency. This was in tandem with the central bank in I believe, of France. And then last but not least, they have now made the stride to bring in DeFi. So I think Societe Generale wins my Company of the Week award because they are really giving the full case study for all the other major financial institutions to see how you can fully leverage security tokens to the max. Not only did they show how issuance saves you money, not only did they show you how you can do clearing and trade immediately and how you can leverage a central bank digital currency or stablecoin, but now they have gone ahead and submitted a proposal to MakerDAO, one of the leading DeFi communities, to go ahead and collateralize that bond that they had previously issued in the past for about $20 million DAI. So that's an amazing feat, Kyle. I love the fact that Societe Generale, specifically their Forge arm, which is focused on security tokens, is just continuing to innovate and trailblaze to the rest of the world how security tokens should be used.
Totally agree. It's a chef's kiss from me as well. Investment banks, large players are getting involved. Don't miss it. We've been covering it all here on the show, 112 episodes strong.
Better believe it. What about you?
So we may have heard of this company before. It's Acamona. Acamona is the first crowdfunding platform specifically dedicated towards security tokens and digital assets. They came out from almost a year ago now and announced that this was their plan. And now they've come out with 2 really groundbreaking announcements that are exciting. I want to share and shine a spotlight on Acamona. Now, the first one is that they're a crowdfunding platform. We just talked about that. And they have announced 2 clients that they're going to have come out through their platform. The first one is an American Football League is actually going to be crowdfunding their upstart through the Acamona platform with a security token, and the other one is another sports infrastructure company. So they're targeting that sports vertical where there's a lot of financing, there's also a lot of revenue in television contracts. This is an exciting scene and one in a use case I think that a lot of people are excited to get involved in. So kudos to Acamona for bringing 2 new clients to market. We look forward to getting more details that John and others will cover very soon. Not only that, though, they're also launching a transfer agent. So they have on-chain TA, which is their transfer agent. As we talked about before, transfer agents are important in terms of managing the cap table. A security token can trade internationally. You still need that company that actually manages the ledger and updates the ownership of those shares. And so they have now gotten that license as well. They're building out a robust platform. Shout out to Acamona for doing great work.
Oh, that's a fantastic choice, Kyle. They're a great team over there. One of the newer players on the space, but they, as a result, have been focused on blockchain and now an on-chain custodian for transfer agent, yet another one. This is definitely the future of the industry, and they're going to keep racking up those licenses so they can keep doing bigger and bigger things. I love it.
So congratulations to both of our winners, and now we got to get into this NFT security topic.
Non-fungible tokens. Oh my goodness.
Let's get into it,
the
shall we?
phenomenon of 2021. We all saw it go down. We've seen many use cases now. We're talking about using tokenization, specifically creating one unique token. That's what they call a non-fungible token. There are no other copies, and using it to attach digital media to it so that you can now claim ownership of digital media. But we also saw use cases in other ways. We saw it in video games and leveraging avatars. We've seen it with membership models. We've seen it with supply chain. And of course, we've seen it with security tokens.
Absolutely right. So this is in the headlines recently. We've talked about it actually before with examples like Club Necaxa, which is the soccer team that tied ownership to an NFT. We've seen it a couple other examples. We covered Blau and his company called Royal doing something similar. But recently, just this week, Republic, which is the largest crowdfunding portal, who has also launched their own security tokens in the past, announced a new division, Republic Music. This is in partnership with Opulus, which is a company that's, I guess, another provider in the space working on the music side. And they are going to be launching what they call security NFTs. The idea here is attaching music royalties to a non-fungible token. This is a pretty interesting concept, but we have a couple issues with it.
We've seen a couple of others artists try to also do something similar, and now the benefit here is Republic is one of these regulated crowdfunding portals that can allow someone like Oculus to go ahead and raise from the crowd into their digital offering. If it was considered a security, which they're recognizing that it is, sometimes you're limited to the base of investors that you can reach from. But through this crowdfunding portal, you can reach anybody, and that's a big deal. But as you pointed out, Kyle, there are some kind of stipulations with a security token NFT. Now, in episode 99 and 107, we've talked about how NFTs can potentially be labeled security tokens. This is not like utility tokens, where back in the day with ICOs, essentially the activity of an ICO would create it and turn the underlying token into a security. In this case with NFTs, they're not default securities, but they can become securities most of the time by offering some kind of a return through royalties or dividends, or actually by fractionalizing and enabling multiple owners, which is another one of those issues that we directly run into. How can you have multiple owners of something that only one person or is only one token of it? So that's where we start to get the gray area, and in fact, the SEC may start to actually enforce issues like this, and you don't want to run into a gray area.
Yeah, so it's interesting. I think NFTs are great. I think that it's a fun concept and potentially can work in this example. But the reality is, I think that the way that these things are structured, right, and they announced their first deal, which is going to be a single released by rapper Lil Pump and Soulja Boy. And so they're taking this single, essentially putting the single's rights and revenue into an LLC and then selling shares of that LLC through a Reg CF campaign, raising up to $5 million with I think it's a $100 minimum investment. Now, you may hear that and say, this kind of just sounds like shares, right? These just kind of sound like equity shares in a security token. I don't know how much of this non-fungibility there is. That's because as a markets guy, I love the secondary trading. Liquidity is harmed tremendously when you have NFTs. And if you're already selling shares of the royalties, I don't understand why you wouldn't just sell the shares of the royalties.
And that's the key point, right? An NFT means there's only one holder. The token is only held in one wallet, which means it's only being sold to one buyer, hence Kyle's point about restricted liquidity. This is not a fungible share that mirrors other shares and therefore is easier to trade on, say, a secondary market or even over the counter. And so that's the issue here. We don't have any problem. In fact, we love the idea, and congratulations to Republic and Oculus for launching this. The idea of allowing the crowd and anyone to invest into royalties, into artists in different ways is an incredible opportunity, and it's absolutely a security token. But what you're describing is, in fact, not a non-fungible token. So in the case of Club Necaxa that you mentioned earlier, this was indeed a security token that was an NFT, because only one person could buy this token, and it represented 1% ownership in the team, only one token. In this scenario, Kyle and I and you and everyone else can go and buy tokens in Soulja Boy's new release, and therefore there are multiple tokens. They are fungible in order to share them.
shareholders.
That's right. So this is the idea of these are SNFTs. That's something we have a problem with, because we started this show actually from one of the very values of saying, look, we need clarity in this industry. In order for the industry to cooperate and collaborate, in order for regulators to understand and make progress, and in order for customers to be able to actually adopt this stuff and participate, we need clarity in definitions and in lingo. And so we have to call Republic out about this press release saying that they've launched SNFTs. We love the idea of creating new terminology to make hot lingo and create some action, but this is not what this is. It is a security token, and security tokens deserve the love and praise for this incredible innovation.
So amazing work to Lil Pump, Soulja Boy, their teams for getting involved in this space. Obviously, congratulations to Republic and Oculus and everyone else involved. I'm sure it was a massive undertaking to bring this product to market. Incredibly, incredibly exciting stuff. Definitely check out this security token offering alongside, I'm sure, many other singles and artist royalties that they're going to be launching in the future. And this is just fantastic news. And hopefully this all made a lot of sense to you. We have a Discord channel where we actually Join in with all other community members to discuss the main topic we just covered today, as well as everything here on the show. We just jump in there, we do trivia, we hang out, we have a great time, do audio, text. Join the community and follow us on Twitter, follow us on LinkedIn, connect with us anywhere. We love to talk tokens and blockchain.
We're always happy to answer any questions or take any feedback for the show. And meanwhile, happy tokenizing. We'll catch you next week.